All right. So, yeah, you know that feeling when you're looking at your bank account and like wondering, okay, should I just keep saving this money? Or should I like dive into the world of investing?
Yeah.
It's a pretty classic dilemma. And luckily, we have this YouTube video by Toby Newbatt to kind of walk us through it.
Yeah.
He's a finance expert
Mm-hmm.
who I think breaks this down in a really clear way.
I think what's really good about Toby Newbatt is that he doesn't just like give generic advice. He really focuses on those personal factors,
Yeah.
which are so important when it comes to your financial strategy.
Yeah.
And the first one that he talks about is time horizon.
Okay, so time horizon sounds a little bit fancy.
Right.
What does that even mean?
So basically, it just means like how long are you planning to like invest your money or save your money?
Oh, okay.
So are we talking like a year or two?
Got it.
Are we talking 30 years?
Yeah.
So if you're only looking at like a year or two, investing in the stock market's a little bit more risky.
Okay.
He said that historically over 1 year, investing has led to losses 27% of the time.
Whoa, 27% of the time. That's pretty high.
Yeah. So
Yeah.
you wouldn't want to invest if you needed that money within a year or two.
Yeah, that makes sense.
But if you have a longer time frame, like 5 years or more,
Yeah.
then the odds of positive returns increase dramatically.
So it's like with investing, it's a longer term game.
Yeah.
Gotcha.
Patience is a virtue in this case.
Yeah, that's a good way to put it.
Um,
So then he brings up this idea of risk tolerance.
yeah.
How comfortable are you with the idea of like your investments losing money?
Yeah.
Because it's going to happen, right?
It's going to happen.
Especially if you're in the stock market, it can be a little bit of a roller coaster.
Yeah. Yeah, and that's a good way to put it. It's like it's easy to quote Warren Buffett when things are going well and say, "Oh, I'm a long-term investor." But when you see your account go down 20%,
Yeah, right.
it suddenly doesn't feel so good.
Right. It's like easy to say it, but when you see those numbers,
Yeah. Yeah, it's much harder to actually follow it.
it's much harder to like live it.
Yeah.
Okay, so you got to know yourself
You got to know yourself and how much risk you're willing to take.
and like how you would react to that.
Yeah.
Okay.
Because some people are like more risk averse than others, and that's totally fine.
Totally.
So saving offers lower but guaranteed returns.
Right.
Whereas investing, you could make a lot more money,
Yeah.
but you could also lose money in the short term.
So it's like the classic trade-off.
Yeah, it is the classic trade-off.
Okay, so then how do our goals play into this?
Yeah, so that's the third factor that he talks about.
Okay.
He says you need to align your investment approach with your goals and time frame.
Great.
So let's say you're saving for a house deposit,
Okay.
which you want in the next couple of years.
Okay.
Well, then you probably don't want to invest that money
Right.
because you need it soon.
Right.
So you need to prioritize safety and stability.
Gotcha.
But let's say you're saving for retirement in 30 years' time,
Right.
then a more aggressive, growth-focused strategy through investing might be more suitable.
Yeah. So if you're thinking short term,
Yeah.
maybe stick with the savings.
Yeah,
If you're thinking long term,
Yeah.
maybe think about investing more.
exactly.
He also shows some really interesting visuals in the video about like the power of compounding returns over time.
Yeah, he does.
It's like those little investments
Yeah,
can really snowball into something big.
they really can.
What are some of the visuals that stood out to you?
Well, he showed the 20-year rolling returns in the S&P 500,
Okay.
and returns of 7% or more occurred 90% of the time.
90%. So like almost always?
Yeah,
Uh,
basically.
Wow.
And then when you look at the 30-year returns, it's even more impressive. So even during bad periods in the market, the lowest point still yielded a 7.8% return.
So even if I invested at like the worst possible time,
Yeah.
over 30 years, I would have still made money.
Yeah, pretty much.
That's crazy.
He compared that 10% average return on investments to like less than 5%,
Great.
which is what you'd get with a savings account.
So basically my money grows a lot faster when it's invested.
Yeah, exactly.
But I
Maybe.
guess it's also riskier, right?
Yeah, you're right. There is more risk with investing.
Okay.
But he made a really good point.
Yes.
He said, doing nothing with your money guarantees a loss in real terms.
What do you mean?
Inflation.
Yeah.
Inflation's like a silent killer.
Right. It just eats away at your money over time.
Exactly. Even if you have a decent interest rate on your savings account, like 5%,
Yeah.
that might just be keeping pace with inflation.
So I might think that I'm making money, but really I'm just staying afloat.
Yeah, that's a good way to put it.
Okay. So investing has potential for higher returns, but also higher risks.
Yeah,
And saving is safer, but might not even keep up with inflation.
exactly.
So are we saying that, like, there's no right answer here?
Yeah, there isn't one right answer.
It depends on your own situation.
Yeah, it's about finding the right balance for you.
Okay.
He actually suggests a balanced approach.
Sure.
He says it doesn't have to be all or nothing.
Right.
You can combine saving and investing.
Oh, so you could do like a little bit of both.
Exactly. And tailor that mix to your needs and your risk tolerance.
That makes a lot of sense.
So yeah, it's about finding that sweet spot.
Right, the sweet spot for you.
Yeah.
This reminds me, he also talked about diversification,
Oh, yeah.
like not putting all your eggs in one basket.
Yeah, don't just put all your money into stocks.
Yeah.
Want to spread it around a bit.
So like bonds and real estate and all that.
Yeah, exactly.
Oh, that's right.
It was interesting how he mainly focused on the U.S. stock market, though.
Yeah.
I wonder how these principles would apply in, like, different economies.
Oh, yeah, like if I wanted to invest in a different country.
Yeah, exactly. Would the same strategies be relevant?
That's a really good question. I don't know.
Yeah, I mean, different countries have different economies.
Right.
Interest rates can be different.
Right.
And there's currency fluctuations and political instability.
Yeah, true. All those things could impact my investments.
Yeah, for sure.
So we might need to do some more research.
Definitely.
Okay, well, I feel a lot better about this whole save versus invest thing now.
It's good. I'm
Not
glad.
about finding the right answer. It's about making informed choices
Exactly.
based on your own goals and your risk tolerance and your time horizon.
Yeah, and that's what makes personal finance so interesting.
Yeah.
It's personal.
It's all about you.
Yeah.
Okay, so we've talked about time horizon, risk tolerance goals.
Yeah.
He also mentioned something about making your money work for you in more creative ways.
Oh, yeah. He talked about, like, exploring alternative investments.
Like what?
Things like real estate,
Okay.
or even starting a side hustle
Ooh, interesting.
to generate more income.
So it's not just about saving and investing.
No, it's not.
It's about thinking outside the box.
It is.
I like that.
Yeah, it's about taking control of your financial future.
Right, and finding what works for you.
Ex-
It's kind of cool to realize that there are so many options out there.
Yeah.
It doesn't have to be just one thing.
Yeah, and I think that's the best thing about personal finance,
Yeah.
is that you can really make it your own.
Yeah.
It's all about what works for you.
It's personal.
It is.
I'm really glad that we did this deep dive
Me too.
because I was feeling kind of lost about all this stuff.
Mm.
But now I feel like I have a much better grasp.
Yeah, and that's what I love about these deep dives.
Yeah.
We take these kind of complex topics
Yeah.
and we try to make them easy to understand.
Right.
So you can actually apply these things to your life.
Exactly. It's not just about like hearing information.
Yeah.
It's about like actually being able to do something with
Yeah,
it.
it's about taking action.
Right.
And speaking of taking action,
Yeah.
I really liked that point that Toby made about like exploring alternative investments.
Yeah.
It's not just about sticking your money in a savings account or picking stocks.
Yeah.
Like there's other things that you can do. He mentioned real estate
Well-
or even starting a side hustle
Right.
just to like generate some extra income.
Yeah, I like that.
Yeah, it's all about thinking outside the box.
Yeah. It's about being creative and finding what works for you.
Yeah, exactly.
Awesome. Well, I think we covered a lot today.
I think we
We
did.
talked about time horizon, risk tolerance, goals,
Yep.
diversification.
Even inflation.
Oh, yeah. That's right.
We talked about everything.
We really went deep.
We did a deep dive.
So for everyone listening out there, I hope you feel a little less intimidated by this whole save versus invest thing now.
Mm-hmm.
The key takeaway here is just like, you got to figure out what works best for you
Exactly.
based on your own situation,
Your own goals.
your own goals.
Yeah, your own time frame.
Yeah, and how much risk you're comfortable with.
Yeah.
Basically, you just got to do your research
Yeah.
and make informed decisions.
And remember, there's no right or wrong answer.
Right.
It's all about finding what works for you.
I love that.
Yeah.
Awesome. Well, thanks for joining me on this deep dive.
Thanks for having me.
It was fun.
It was.
And to everyone listening out there, happy saving and investing.
Yeah, good luck.